The end of the day with Ray. Hello, my friends. Well, ladies and gentlemen, if you look on the Sharp Interactive board, you'll know it's time for Xerox's third quarter review. I listened to the conference call. I went through the financials. I want to share some thoughts. You know, I was reading some of the analysts and their interpretation of Xerox third quarter. Not the financial analysts, the analysts within the print industry. And I'm reading where they're talking about how Xerox is going to make massive slashes. They're going to disrupt geographic territories. It's going to be painful for the Xerox employees. Here's what I'm going to tell you. Whether you're a Xerox employee or an employee anywhere in the world that sells supplies and services print equipment, without changes, there won't be a Xerox. Without changes, your dealership won't exist. Because the print world and the way print was delivered over the last 25, 30 years, those days are over. And today I want to share some thoughts on Xerox Reinvention and how that reinvention should wake up the entire industry. I've been saying for a long time that Xerox is the largest player in the space, the largest dealer in the space. They deliver a product, a print product. They supply that print product and service that print product with a bigger footprint than anybody in the world. So when you're delivering the biggest footprint in a product that's declining, guess what? Well, you're going to feel the pain before anybody else. If you're that dealer friend of mine that sold 5 machines last month and the month before you sold 4 and you think things are good, you're living in a naive, delusional world. When you look at Xerox, when you look at what's going on at HP, by the way, HP will deliver what? 20% decline in revenue year over year. Xerox delivered a 7% decline quarter over last year quarter. And folks, the stock market was mean to them. It's coming back a little bit today. I'll share that in a minute. But I can't imagine what's going to happen when Xerox publishes their numbers and they got a 20% decline in revenue year over year. Get ready, HP, for a big decline in your shares as well. The bottom line, ladies and gentlemen, our industry, those friends of mine that sell supply and service print equipment, you better be prepared for what's coming, and you better be willing to transition. You better not be afraid to make the tough decisions you're going to have to make. So when I'm thinking about what the industry's analysts are saying about Xerox, I decided that I'd come up with my own saying. And I want to start the episode out with that saying. Unapologetically, Xerox faces the reality of business print declines. Reinventing the iconic brand is not optional. It's demanded by common sense. Ladies and gentlemen, those of you that are going to focus on individual employees that work within our industry and think it's terrible because these individual employees are going to be disrupted, I'll tell you something right now. All the employees are going to be disrupted if there's not a massive transition in the space, if there's not a transformation in the space. It's not optional. It's demanded by common sense. I want to share this slide with you. And this is a big concern I have for the entire industry. We're on the road to a reinvention. We're also on the road to retirement. If you think about the print industry, the average age of the leaders in the industry puts them retiring out in about 6 years. The current model will not go past 2030, which is 6 years. Ladies and gentlemen, we got to figure out the leaders that are in the bus just waiting to take the exit to retirement. We need to pull the bus over and throw them off the bus. I'm so sick of hearing leaders in our industry that have about 6 years left talking about how they hope nothing changes till they retire. They're in the damn way. Get off the bus. Take the exit to retirement, because going to the road to reinvention is going to be brutally painful, and it's going to take astute leadership. It's going to take leadership that has a vision, but not tunnel vision. Because true leaders can change their vision if they're not bogged down with tunnel vision. They can modify along the way. A lot of my industry friends, they think they're great change experts. They'll brag about it. I'm a change expert. Problem with thinking that way, you usually wait around till you have to change, till you're forced to change, and then it's too late. It's those that can modify along the way that win. It's those leaders that don't have tunnel vision and can modify the vision they once had. And ladies and gentlemen, our industry needs leaders that can do this, because it's only going to be bold leaders that are willing to challenge the status quo that are going to do this, that are going to get through this. And challenge the status quo, the print industry is going to be painfully brutal. Let's talk about Xerox's reinvention before we get into their numbers. They have a simplification, reposition for growth, and they have financial objectives. When I think about the simplification of Xerox, this is a big deal. They have to simplify processes, especially past processes. And we all know what the past processes are for Xerox. How do we service print equipment? How do we deliver print equipment? What kind of sales force do we put in place? What's our objective going into the market? What products do we want to focus on? What products do we not want to focus on? How can we use AI and data to simplify the service deliverable, to pull cost out of the service deliverable? All great things. And all the dealers for Xerox, whether you're a dealer for Xerox or whether you're a dealer for one of the other OEMs, you should be thinking the same thing. How do you simplify? Especially those outdated processes. The processes that are built for a business that's in decline. Xerox talks about geographic optimization. People hear the word geographic optimization, they think, oh, well, they're going to wipe out some geographies. They're going to get rid of their direct business. Ladies and gentlemen, I'll go on record here to say this, and I don't have any inside information, but I would not be surprised if the EMA is going to look different in the very near future. I wouldn't be surprised if the EMA, Xerox, and Fuji work out some kind of deal like Xerox did in the ANZ. In the ANZ, Xerox told Fuji, go after it. Paid them for some licensing agreement. Maybe they'll do the same thing in the EMA. I would have to believe that the cost for revenue in the EMA is much higher. The EMA represents a pretty good portion of Xerox's revenue. But if they could figure out a strategic way to offload some cost, they probably should do it. Offering and pricing optimization. Streamline product offerings enable consumer-like touchless experience for clients, capture incremental market opportunities through enhanced pricing models. A lot of buzzwords in there. But at the end of the day, you got to optimize your pricing. You got to optimize your costs. You got to figure out how you're going to deliver a better experience to those end users you service and support. And we all know that a better experience lives in the intersection between the digital and physical world. We also know that Xerox plays in that intersection. And they're trying to figure out how to play more in that intersection. Just like all Xerox dealers should be doing. Just like our entire industry should be doing. How do we play more in the intersection between the digital and physical world, optimize that intersection for a big ROI? Operating model simplification, end-to-end organizational and structural simplification to drive operating costs. You know they've had this Project Own It for a while. Project Own It has put a whole lot of money back into the coffers of Xerox. They've had to make some pretty tough decisions to capture back those costs. But they didn't have a choice. Xerox, the largest provider of print equipment to end users that supplies and services it. In a marketplace that's declining, they have to make some tough decisions. Xerox has some financial objectives. They want to get back into double-digit percentage of operating profit. Xerox lived in double-digit operating profit percentage for a long time. They got spanked really hard in 2019 going into 2020. They haven't been able to come back from that spanking. They've stayed flat. They have acceptable operating profit, especially when you compare them to some of the other folks in the industry. But at the end of the day, I want to talk about the financial objectives regarding Xerox because I think these objectives could also cause them some pain. But ladies and gentlemen, you got to reposition for growth. Xerox knows it, and so should you. What are you going to bring into the marketplace? How are you going to define IT services, and how are you going to take that deliverable and get revenues and profits from that deliverable? How are you going to shut down any deliverable that brings you revenue but not enough profit? Xerox actually talked about that on the conference call. They talked about paper. Delivering paper is not profitable anymore. We're not going to do it. When I heard that, I'm thinking, well, hopefully HP's listening to that as they talk about delivering paper as a subscription. Ladies and gentlemen, we got to look for the revenue that brings us the profit. We got to look for the services to satisfy that print myth that we have in a different way, that gives those customers a different experience, a valuable experience. What will those services be? If we're not on a path to look for them, to perfect them and deliver them, we're on a path to disaster. Let's talk about the numbers. The equipment for the third quarter were $386 million. Post sales were $1.266 billion. Total revenue was $1.652 billion. If you look over here and you see the third quarter 23, we had a drop, 7% drop. In the market, they weren't excited about 7% revenue drop. And the market reacted yesterday. It came back a little bit today. We'll see where it goes. But the market has to be excited about what the future for that print customer is. And I think Xerox has a hard time expressing that, as well as a lot of my other friends in the industry. And expressing the value of those accounts outside of print is going to be a leader's number one focus going forward. Whether you're in private equity hands or whether you're in the stock market hands, you have got to be able to convince those investors that you're going to get revenue out of those accounts that were once print accounts. What's that non-print revenue going to be? I've been saying that a lot. I'm going to say it a lot more. Regarding the EMA, it's $526 million in revenue for the third quarter. So you can see that that's a good chunk of revenue. I mean, it represents 32% of Xerox's revenue. But at the end of the day, does it cost more to get that revenue in the EMA? Is there a better option in the EMA in that geography? I believe there probably is. We'll see where that goes. I wanted to go back and I wanted to look at Xerox's revenue. I went back to 2017. In 2017, Xerox was almost a $10 billion company. In 2019, they were $9 billion. In 2020, they went down to $7 billion. That's when they got punched. They got punched, global pandemic, end users aware, hey, you know what, we're going to work remote, we're not going to print on these big machines. We all know what happened in 2020. The whole damn world in our industry went to hell. Some people paid attention to the hell it went to. Some people didn't. Some people were banking on hope. It's all going to come back. They're going to go back to the office. I've been saying for a long time since that pandemic started, it's not about going back to the office or working at home. It's about a remote worker. It's about a remote worker. And when you build remote processes, the first thing you got to get rid of is what? Print and scan. Everybody knows that. But ladies and gentlemen, since 2020, the revenue's been pretty flat, about $7 billion. When they end 2023, this year, this will be the first year they go under $7 billion. The real likelihood they will. And this is where the industry has to wake up and pay attention. These big operations in the print space are going to start seeing some big declines because they're the biggest. But it's an indicator of where the industry's going. It's an indicator that the industry has to reinvent itself. And yes, it's going to be painful for the status quo. And those of you that want to focus on how painful it's going to be for the status quo, you're thinking about the past. Because again, without the pain, there is no future. There is no gain. There is no transformation. Fiddle, we've all heard of Fiddle, right? The finance company over there at Xerox. A couple years ago, they spun that thing off. I was excited about this. Xerox was too. But think about what's happened since then. Interest rates highest they've been in 20 years. Cost to manage a portfolio of leasing is more and more expensive than ever. The risks are higher than ever. And at the end of the day, I think Xerox made the right decision. Let's pawn off some of this debt. They did a deal with Peak in HPS. That was a great deal in my opinion. Again, you know, Steven and the team had a vision of what they could do with Fiddle. That vision included, hey, let's get some originations outside of our core deliverable of print. All that sounds great. That's a great vision. But thankfully, they didn't have tunnel vision. So when things changed in that finance space, they were able to pivot and respond accordingly. Fiddle right now carries a $2.49 billion debt. They want to get that down to $1 billion. Even though that $2.49 billion debt is a pretty good debt, it's spread over a whole lot of leases. But at the end of the day, they need it off their balance sheet. They need it off their balance sheet so they can pivot, transition, have a cleaner balance sheet. When Xerox ends their fourth quarter and they publish their year-end numbers, I'm going to dig deeper into those numbers and we'll do some analyzation on their debt load and how I believe that debt load is either going to harm them or help them, or how they might have to reposition some of that debt. But ladies and gentlemen, we need more details. I'm looking at this chart here, and this is where Xerox shows entry, mid-range, high-end, and other. total equipment revenue and they break it all down by revenue, I'd like to see it broken down by operating profit. What's the difference in the operating profit between the high end, mid-range, and entry? It would be nice to know that. What's the revenue on the different buckets of non-print related services? Document management, care AR services, IT services, backup services, whatever those services are, what's the revenue in those buckets? That's what the investors want to know. Ladies and gentlemen, at the end of the day, you could see yesterday at closing, Xerox was down almost 4%. Kind of took a punch. Marketplace saw a 7% decline in revenue. Came back quite a bit this morning. Because folks, maybe they're listening. Maybe they're realizing, okay, they were down in revenue, but they have a compelling story. They have a massive myth. I believe the day that Xerox and its leaders can articulate the value of that massive myth, revenue coming out of it and the profit attached to those revenue that's non-print related, will be a great day. And they can't keep kicking the can down the road just like my other OEM friends. But I do have a real concern with Xerox's transition as they try to navigate this ship through these challenging waters. I believe they cannot do it on the stock market. It's going to be tough. You know, they have to set out a goal to give shareholder returns of at least 50% of annual free cash flow, and I just don't see how you could do that. You want to get double-digit percent of profit, that's great, but at the end of the day, how do you deliver 50% of your free cash flow when you're trying to transition, because the cost of transition is going to be pretty high. We'll see where that goes. Let me wrap it up with this, ladies and gentlemen. One of the analysts asked Xerox a question on the phone call, the financial analyst. What's the starting point of reinvention in terms of revenue? What a fantastic question. That question got kicked down the road a little bit. But Steve and you and your team are going to have to start answering these questions. Only the details of non-print revenue within the print base will the future value of that print base be appreciated. Only the details of non-print revenue within the print base will the future value of that print base be appreciated. Investors need to know this. But ladies and gentlemen, I'd like to see Xerox go off the stock market and go private. I'd like them to do what Michael Dell did once. Let's go private, reinvent ourselves, go back out to the market. I believe Xerox needs to look for an out-of-box partner. I think about when Kaseya bought Datto, this big backup company. What if Xerox had done that? Some of you are saying, oh, come on, Ray, Xerox buying Datto? Well, you know what? If they bought Datto, the Datto people would have stayed. They would have embraced him. They would have used their expertise, and they have a massive miss that maybe they could have delivered a component of IT services that they could quickly deliver, quickly get revenue from, and quickly get an ROI from. Xerox needs an IT partner, not an IT services company. Right now, they need a partner that's in the IT services space that has a product, has a software, whether that's a SOC service, whatever it is. Something they could go into that myth with right now. Those thousands of customers, drive revenue, drive profits. And if they found the right partner, maybe with that partner could come a private equity group that could take the whole thing private. Ladies and gentlemen, the industry has to go through a massive transition. Those of you that believe this is going to happen and all the employees are going to be happy, you're out of your minds. Those of you that believe this is going to happen without major changes in geographies all over the world for the world players, you're out of your mind. You're naive. It'll be those leaders that can modify their vision, that don't have tunnel vision, that'll get through this. I believe Xerox has those leaders. Only time will tell. But everybody watching me knows this: status quo is the killer of all that'll be invented. Don't get stuck in status quo, and I'll see you all tomorrow.